Welcome everyone to the deep dive.
Great to be here.
Today we're jumping headfirst into the crypto market. It's always moving, always, well, turbulent, right?
Absolutely. Never a dull moment.
We're going to try and unpack some of these really rapid shifts, especially, the surprising things happening with Bitcoin and Ether recently.
Yeah, there's a lot to cover there.
And to do that, we've sifted through quite a pile of sources for you. We've got things from the Financial Times, Reuters, Axios, The Verge.
Reddit, Times of India, Crypto.news, AP News. Quite the mix.
Exactly. The goal here isn't just headlines. We want to connect the dots, figure out what's really driving things.
And those key insights, maybe some surprising facts along the way.
Right, so you can feel properly informed without getting, completely snowed under by it all. Shall we dive in?
Let's do it. What's really striking, I think, is just the speed of everything and how different forces seem to be pulling the market every which way.
Totally. Take Bitcoin. I mean, it really looked like it was just unstoppable for a bit there.
It did. The trajectory was, well, pretty breathtaking.
The sources definitely show that. It just rocketed, didn't it? Hit $124,000 at one point, way past previous records.
An incredible peak.
But then almost immediately it got pulled back, sharply. Was there like one big thing that just slammed the brakes on?
Well, the sources are pretty clear on this. It really highlights how crypto, for all its, moonshot talk and bold narratives, it's still deeply connected to the wider economy, global economic realities.
So inflation.
Exactly. That U.S. inflation data wasn't just a wall, as some put it. It was a stark reminder. Rising interest rates, the usual response.
Right, central banks tightening things up.
It just sucks liquidity out. Money moves away from riskier stuff, speculative assets, and, well, crypto is definitely in that category for many.
So it forces a rethink of those valuations that maybe ignored traditional economic gravity?
Precisely. It's a reality check.
Okay. But Bitcoin wasn't the only story. Ether had a big surge too, right? Nearly hit $4,800 before it cooled down.
It did. And what's really interesting there, I think, is the role of institutional demand.
Yes. The sources mentioned heavy hitters like BitMine and SharpLink actively buying. What does that signal when the big players move in like that?
Well, it suggests maybe a deeper shift in who's participating. It's not just retail investors clicking buy.
You mean the whales?
Exactly. The sources specifically track these huge Ether movements. $882 million worth moved off exchanges into secure storage vaults, they call them.
Off exchange into vaults. So not for quick trading then?
Doesn't look like it. It's described as institutional, kind of stealthy. A classic sign of long-term accumulation, not just flipping for a quick profit.
So this quiet buildup by big institutions, it suggests they see real, maybe fundamental value in Ether long-term.
It certainly points towards growing confidence, yes.
Yeah.
And maybe a more strategic approach.
And didn't the regulatory environment help a bit too? A friendlier SEC, the ETF momentum, that gave ETH a boost as well.
Oh, definitely. The ETF approvals, that's clearly sparked significant institutional interest and capital inflow. Just look at Circle.
The USDC stablecoin issuer.
Yeah. Their Q2 returns got a $658 million boost, mostly from their USDC reserves. Now, they did have an IPO-related loss overall, but
the underlying growth?
Staggering. 90% year-over-year growth for USDC. It just underlines that the demand for these digital assets, it's still there, still growing, even when the broader market's choppy.
90% growth. Wow. That's huge for a stablecoin issuer, especially now. Okay, so beyond trading, we're also seeing these strategic shifts. Companies treating Bitcoin differently, this Bitcoin treasury idea. Tell us about that.
Right. This is fascinating. And maybe revolutionary is the word. These companies aren't just buying Bitcoin with spare cash.
No.
They're using traditional finance tools, debt markets, public offerings, specifically to acquire Bitcoin.
So they're borrowing money to buy Bitcoin.
Essentially, yes. Leveraging up.
Yeah.
It suggests Bitcoin is moving, for them at least, beyond just a speculative bet. It's becoming a strategic reserve asset. Almost like, gold used to be for nations, but for corporations.
Blurring the lines between crypto and traditional corporate finance.
Completely. And that $2 billion haul by the Trump-linked media company, the sources flag that as a prime example of this exact strategy in action.
So actual operating companies, not just investment funds, seeing Bitcoin as a core part of their treasury. Wow. And talking corporate integration, Peter Thiel's exchange, bullish. It went public, raised $1.1 billion.
It did. Debuted on the NYSE. Big splash.
But the sources called the shares hyper-volatile.
Well, yeah, that kind of shows what happens when crypto meets the traditional stock market, right? You get that wild crypto energy reflected in share prices. It's traditional finance grappling with this new, very dynamic asset class.
So lots of excitement, strategic plays, institutional money.
But, and this is crucial, we also have to remember the other side of the coin, the market's less glamorous realities.
Which brings us, unfortunately, to things like the Kwon situation. A stark reminder.
It really is a very sharp contrast to all the market highs. The sources detailed Kwon actually admitting fraud related to that catastrophic Terra USD collapse.
That was huge. How much was lost again?
A staggering $40 billion, just wiped out. And he's apparently facing sentencing in December.
$40 billion. It's easy to forget these risks amidst the hype.
Exactly. It's a vital lesson. Incredible innovation and opportunity, yes, but also significant risk. And the potential for, well, really bad actors and outright malfeasance.
Okay, so let's try and pull these threads together. We've got record highs, then sharp pullbacks driven by macroeconomics. We've got huge institutions quietly accumulating ether. We have companies using debt to build Bitcoin treasuries.
And then the shadow of massive failures like Terra USD.
Right. So the big question everyone seems to be asking, the one underlying a lot of the sources, is this a real fundamental structural shift happening in digital assets? Or are we just seeing signs of another, perhaps bigger, bubble inflating?
Yeah, that's the core tension, isn't it? You can clearly see it when you connect these dots. On one side, yes, exhilarating highs, huge momentum for Bitcoin and Ether. You've got major institutions involved, innovative corporate plays like the Bitcoin treasury idea.
All pointing towards more legitimacy, more integration?
Potentially, yes. Yeah. Signs of growing mainstream acceptance. But then you're constantly yanked back by reality, real-world economics like inflation hitting the brakes. And you can't ignore massive blow-ups like Terra USD. It's a market that's evolving incredibly fast, trying to mature maybe, but still wrestling with extreme volatility and these inherent dangers.
It really is a powerful story unfolding. Growth, adoption, big money moving in, but always balanced against those past failures and that wild volatility. It brings us right back to that fundamental question, doesn't it? Structural shift or just a bubble getting bigger?
Absolutely. And perhaps this leads to a final thought, something for you, the listener, to really mull over. We talked about these Bitcoin treasury companies relying heavily on leverage, borrowing to buy Bitcoin. How might that specific blend, traditional finance leverage, meeting new digital assets, how might that fundamentally change the long-term stability equation? Does it make the system stronger, or does it build in a new kind of potential implosion risk for the crypto market? What does this all mean for that ongoing dance between the market narratives, the stories people tell, and the underlying economic fundamentals? It's definitely something worth thinking about.